Welcome to Wonderslate. Subscribe to our Telegram channel given in the description to updates and study materials. Topic for today's quiz is Financial Statements. Question number 1. All liabilities shows _balance. Option A. Debit. Option B. Credit. Option C. Nil. Option D. Positive. The correct answer is Option B. Credit. Liabilities account refer to the account against which the business is liable to pay. All liabilities account always have a credit balance as liabilities are always credited. Examples are sundry creditors, bank overdraft, unsecured loans, outstanding expenses, etc. Question number 2. Asset ledger shows _balance. Option A. Debit. Option B. Credit. Option C. Nil. Option D. Balance. The correct answer is Option A. Debit. Assets are real account and therefore will always show debit balance. Following entries are passed in the books of account at the time of purchasing an asset. Fixed assets AC. Drive. To bank/supplier AC. Where the asset account is debited for assets bought in and are credited if asset is sold or disposed. Question number 3. Trading account is prepared to know _ Option A. Gross profit. Option B. Net profit. Option C. Both A and B. Option D. None of them. The correct answer is Option A. Gross profit. To know the financial position of the business, financial statements are prepared. Normally the financial statements are prepared at the end of the financial year. Trading account includes the items of purchase and sale of trading goods and direct expenses. The overall outcome of trading account is to know the gross profit of the business. Question number 4. Financial accounts state the _ position of a concern. Option A. Financial. Option B. Economic. Option C. Non-financial. Option D. None of them. The correct answer is Option A. Financial. Financial accounts state the financial position of the firm. To know the financial position of the company, the financial statement like profit and loss statement and balance sheet are prepared. Profit and loss account show the profit or loss of the business for a particular period, whereas the balance sheet shows the state of affairs as on date. This includes the position of assets and liabilities. Question number 5. _ is prepared to meet the requirements of financial users. Option A. Financial statements. Option B. Trial balance. Option C. Cash flow statements. Option D. None of them. The correct answer is Option A. Financial statements. At the end of every financial year, books of account of the firm are closed to prepare the financial statement. Financial statements are prepared to know the profitability of the firm and the financial position of the firm on a particular date. Below are the financial statements. Trading and profit and loss account, balance sheet, fund flow statement. Financial statements are prepared to meet the requirement of financial users, which includes owner, investors, lenders, creditors, etc. Question number 6. All expenses account show _ balance. Option A. Credit. Option B. Debit. Option C. 0. Option D. Negative. The correct answer is Option B. Debit. Expense account are classified as nominal account. As per the rule of nominal account, all expenses and losses are to be debited. Hence all expense accounts show the debit balance. Question number 7. Final accounts include preparation of underscore. Option A. Reading AC. Option B. Profit and loss AC. Option C. Balance sheet. Option D. All of them. The correct answer is option D. All of them. Question number 8. Financial statements are usually prepared at the underscore of financial year. Option A. End. Option B. Beginning. Option C. Middle. Option D. None of them. The correct answer is option A. End. To know the financial position of the business, financial statements are prepared. Normally the financial statements are prepared at the end of the financial year. Financial statements includes the following: trading, profit and loss AC, to know the profitability of the business. Balance sheet, to know the position of assets and liabilities of the firm. Fund flow analysis, to know the movement of fund during the year. Question number 9. Stock valued at 20,000 rupees sold for cash at 24,000 rupees would cause: Option A. Decrease in current assets by 20,000. Option B. Increase in owner's equity and total assets by 40,000 rupees. Option C. Increase in debtors by 24,000 rupees. Option D. None of these. The correct answer is option B. Increase in owner's equity and total assets by 40,000 rupees. Value of stock equals 20,000 rupees. Sale price of stock equals 24,000 rupees. Therefore, gain on sale of stock equals 24,000. Gain on sale of stock equals 24,000 rupees, 20,000 rupees. Gain on sale of stock equals 4,000 rupees. Gain on sale of stock will result in increase in the net profit, which ultimately increases owner's equity and total assets. Question number 10. Underscore represents the cost of unsold goods lying in the stores at the end of the accounting period. Option A. Closing stock. Option B. Opening stock. Option C. Purchases. Option D. Sales. The correct answer is option A. Closing stock. Closing stock represents the cost of unsold goods lying in the stores at the end of accounting period. The closing stock is calculated as opening stock plus purchasing sales equals closing stock. Question number 11. Provision for discount on debtors is underscore to profit and loss account. Option A. Debited. Option B. Credited. Option C. Not recorded. Option D. No entry. The correct answer is option A. Debited. Question number 12. Accrued income will appear on the underscore side of the balance sheet. Option A. Asset. Option B. Liabilities. Option C. Debit. Option D. Credit. The correct answer is option A. Asset. It may happen that certain items of income such as interest on loan, commission, rent, etc. are earned during the current accounting year but have not been actually received by the end of the same year. Such incomes are known as accrued income. The adjusting entry for accrued income is accrued income AC doctor to concerned income AC. The amount of accrued income will be added to the related income in the profit and loss account, and the new account of accrued income will appear on the asset side of the balance sheet. Question number 13. Underscore equals income received plus OS income, income received in advance. Option A. Total expense. Option B. Total income. Option C. Asset. Option D. liability. The correct answer is option B, total income. Question number 14. Bad debts after preparing trail balance are underscored from debtors. Option A, deducted. Option B, added. Option C, no effect. Option D, none. The correct answer is option A, deducted. Question number 15. Prepaid expenses is shown under underscore side of balance side. Option A, asset. Option B, liability. Option C, debit. Option D, credit. The correct answer is option A, asset. Question number 16. The closing stock of the year becomes the underscore of the next year. Option A, liabilities. Option B, asset. Option C, opening stock. Option D, dead stock. The correct answer is option C, opening stock. The closing stock represents the cost of unsold goods lying in the stores at the end of the accounting period. The adjustment with regard to the closing stock is done by crediting it to the trading profit and loss account and by showing it on the asset side of the balance sheet. The closing stock of the year becomes the opening stock of the next year and is reflected in the trial balance of the next year. Question number 17. Outstanding expenses is shown on the underscore side of the balance sheet. Option A, assets. Option B, liabilities. Option C, both A and B. Option D, none of them. The correct answer is option B, liabilities. It is quite common for a business enterprise to have some unpaid expenses in the normal course of business operations at the end of the accounting year. Such items usually are wages, salaries, interest on loan, etc. When expenses of an accounting period remain unpaid at the end of an accounting period, they are termed as outstanding expenses. As they relate to the earning of revenue during the current accounting year, it should be duly charged against revenue for computation of the correct amount of profit or loss. The entry to bring such expenses into account is concerned expense AC doctor to outstanding expense AC. The above entry opens a new account called outstanding expenses, which is shown on the liabilities side of the balance sheet. The amount of outstanding expenses is added to the total of expenses under a particular head for the purpose of preparing trading and profit and loss account. Question number 18. All adjustments are reflected in final accounts at underscore places to complete double entry. Option A, 2. Option B, 3. Option C, 4. Option D, 5. The correct answer is option A, 2. Question number 19. Interest on capital will be underscore. Option A, debited to profit and loss account. Option B, credited to profit and loss account. Option C, debited to trading account. Option D, credited to trading account. The correct answer is option A, debited to profit and loss account. Sometimes, the proprietor may like to know the profit made by the business after providing for interest on capital. In such a situation, interest is calculated at a given rate of interest on capital as at the beginning of the accounting period. If, however, any additional capital is brought during the year, the interest may also be computed on such amount from the date on which it was brought into the business. Such interest is treated as expense for the business and the following journal entry is recorded in the books of accounts. Interest on capital AC drive. In the final accounts, it is shown as an expense on the debit side of the profit and loss account and added to capital in the balance sheet. Question number 20. There are certain items which are not recorded on day-to-day basis such as Option A. Salary expenses. Option B. Wages expenses. Option C. Depreciation on fixed assets. Option D. Rent expenses. The correct answer is Option C. Depreciation on fixed assets. Depreciation on fixed assets, interest on capital, etc. are not recorded on day-to-day basis. These are adjusted at the time of preparing financial statements. Thank you for watching the video. If you'd like practice this quiz, then download the Wonderslate app now. Link in the description below. If you have any suggestion for us, feel free to leave comments. If you liked the video and want to see more of it, hit the thumbs up and don't forget to click on subscribe button to get more updates of the future videos.